What's good, family? Welcome back to Horizon Market Moves, where we are building legacy one trade at a time. Today, we are diving into one of the key skills of becoming a professional trader: understanding time frames and learning how to do top-down analysis the right way, smart money style. All right. If you don't flow through your time frames properly, you will feel lost all the time. You get lost in the charts, lost in the candles. It'll be a mess. All right. You'll be second guessing your setups. You'll be taking trades that don't even align. You'll be taking trades that don't even align with the big picture. All right. So today I'm going to show you exactly how smart money traders think about time frames, what to use them for, what type of traders typically move in each one, and how you should flow through the charts from the top down, brick by brick. All right. Here's the first thing you got to know. Not every time frame is for the same kind of trader. You got to know what time frame matches your style and what purpose each time frame serves. Okay. This is why a lot of people mess up looking for scalps using the monthly charts or trying to swing trade off the 1 minute. That is completely backwards. Here's how it really breaks down. So right now I got the monthly pulled up. The monthly chart is for position traders and investors. These are the people looking at the big picture, the major liquidity targets that the algorithm might be hunting over weeks and even months. If you're an intraday or a scalper, you are not using the monthly for entries, but you can look here occasionally to see if we are approaching major liquidity zones that could cause huge shifts on the lower time frame. Let's move on to the weekly. The weekly chart is mostly used by position and swing traders. If you're swinging trades over multiple days to a couple weeks, this is where you start seeing real structure shifts that matter for your trades. On the weekly, you're looking for breaks of structure or change of characters, major liquidity targets, large fair value gaps that can become magnets for price. Even as an intraday trader, it's smart to peek at a weekly once in a while to know if price is hunting for key weekly levels. Now let's go to the daily. Let's talk about the daily now. Now we get into the bread and butter for swing traders and smart money intraday traders. The daily chart is where you should be starting your top-down analysis 99% of the time if you trade anything intraday. The daily gives you your dealing range. Are we in a premium or discount? Where's the external liquidity resting, buy side or sell side? What's the overall directional bias for this session? When you know this, you stop forcing trades that go against the bigger flow. The daily sets the tone for the entire day. Next, we move into the 4-hour, all right? The 4-hour chart is key for intraday swing traders and intraday scalpers. This is where you can see more refined structure shifts that tell you if the algorithm is expanding with the daily bias or if it's prepping for a reversal. On the 4-hour, you should be looking for breaks of structures, changes of characters, fair value gaps that could act as points of interest where liquidity engineering might be setting up. If the 4-hour aligns with the daily, you got a green light to continue hunting trades with your bias. If it doesn't, you might need to sit on your hands or wait for cleaner structure. The 1 hour. The 1 hour is where intraday traders and scalpers do a lot of damage when used right. This is where you prep for session flow, meaning what's the market likely to do during this session? New York, London, or Asia? 1 hour tells you, is the market respecting daily and 4-hour bias? Are we sweeping liquidity and driving toward the target? Where can I mark my points of interest to look for entries? This is where you get tactical, mapping the path you want to engage with during today's session. All right. The 15-minute. This is for precision scalpers and intraday traders refining their entries. See, you're not trying to build a full bias here. You're using a 15-minute to prep for where you like to take an entry. Look for engineered liquidity sweeps, breaks of structure, signs of displacement coming, key points of interest that align with your higher time frame bias as well. If the 15-minute if the 15-minute aligns clean, now you start prepping to drop down to your execution chart. The 5-minute. The 5-minute is where precision scalpers and smart money entry traders watch the algorithm engineering happen live. This is where you observe SMT, which is smart money technique, liquidity sweeps, breaks of structures, displacement, points of interest, interaction in real time. You do not trade off random 5-minute candles. You're watching for the engineered entry window. Now let's go to the 1-minute time frame. Finally, the 1 minute is your execution chart only. You do not build bias here. You only come to the 1 minute after your full top down confirms alignment. On the 1 minute, you are simply executing your trade after you see SMT or a liquidity sweep, the breaker structure, or a displacement. If you do not see this, you do not click. This is where patience and discipline separates the pros from the gamblers. So family, understand this. Every time frame has a purpose. If you use the wrong time frame for the wrong purpose, your flow will stay inconsistent. Learn to start with the right map. The order is this: the daily, the 4-hour, the 1 hour, then prep on 15-minute and 5-minute, and execute on the 1 minute. That's how smart money traders think. That's how you build this brick by brick. All right. So now that you understand what each time frame is for, now I'm going to show you how to move through the chart every day, top down style, so you can frame your trades the way real smart money traders do it. If you move through your time frames right, you're going to stop forcing trades, stop second guessing your buys, and stop getting chopped up on lower time frames. You're going to flow with the narrative. This is the flow I want y'all to practice daily from this point on. All right. So first things first, I open up my daily chart. This is where I'm building my narrative for today's session. On the daily, I want to see where's the current dealing range, where is premium and discount, where is external liquidity resting, buy side or sell side. If I don't know this, if I don't know what side of the market the algo is likely hunting, I already lost before the session starts. So first thing I'm gonna do is mark up my previous day high, previous day low. Now when I mark and see if we are in premium now I want to use my fib to mark premium or discount zones. To do that, I would deal with the range here. I will start down here where the run started at, the most recent run started at on the daily, and I'll bring it up to the top here. My fault, y'all. So this is the most recent run right here. I bring it up to the top here. And yeah, so price already came down here into our discount zone. Our discount zone when we're in an uptrend is this 6.18 area. The 0.5 area is our equilibrium. All right. And I'll show y'all my fib settings so you can screenshot it and set the fib settings to how I have it. And I'm only using the fib to get measurement for premium and discount and equilibrium. So y'all can screenshot this and set up the fib how you want to. You can use the colors how you want to as well. On when we in a discount, price likes to turn around here. So when price is going up and then it reverses, it does our retracement. Discount area is right here at the 618 level. That's when we can buy again at a good price. All right. So next step would be for me to identify any external liquidity targets. So big buy side or big sell side. So what I do is I squeeze and I look to the left and see where price is approaching. So I see that price is approaching here. So I will mark this as my buy side. That just means daily buy side liquidity. I know I marked this up from the daily point of view. That's why I put the D in front of it. All right. Any kind of sell side I'm looking at would be my previous day low right now. So my next step will be for me to identify any kind of fair value gaps that have not been filled in yet. So let's look for them. Fair value gap is a 3 candle structure. When the wicks of the first and the third candle don't intersect, it's a gap in between, and we mark it up like that. But right now, there are no gaps that have not been filled recently. All of these gaps have been filled. So there are none on this run. But for example, here is a fair value gap that ran back through and then went back up to the buy side. So now after I do this, I have my daily narrative. Either I'm favoring longs or I'm favoring shorts today, and I will only look for trades that align with this direction. So after marking up, I still, after marking up this chart, I will be going for longs to reach for this daily buy side right here until price shows me otherwise. I do see this fair value gap here. Actually, price closed above it, but then it turned around. But I'm still looking for longs, y'all, for this example here. So let's move on. So the next step would be to move down to our 4 hour and make sure we still have alignment. All right. So let's get rid of this. It's off the screen. So now I'm looking for any breaks or structures, any changes of characters. Am I seeing expansion toward the target or any signs that the market might reverse? So let's do that. Let's go ahead and mark up any breaks. So here's a break of structure right here. Let's move this out the way for right now. No close above though. We don't have any changes of characters, which is good. I'll go ahead and mark that up as a chart. All right. So as you can see, once we broke down from that daily, right, we were in an uptrend. When you have an uptrend like this right here, right, you will have internal structure each time you break down to another time frame. So since we're in an uptrend, when you break down to the 4 hour, we should be seeing cleaner, higher highs and higher lows. As you can see right here, that's exactly what we got. We got a low here, a high here. Higher low, higher high, higher low. And then we got a higher high. My bad, y'all. And then we got a higher, we got a high right here. But then we got a higher high again and a higher low. So 4 hour is still, my bias is still confirmed by the 4 hour. So we can move on. So if the 4 hours align with the daily, I'm green lighted to stop trades with my bias. If not, you would slow down and watch for more clarity. So now we're going to drop to the 1 hour. This is where I identify my session bias. This is huge for intraday traders such as myself. So I'm asking, what is price likely to do this session in New York, the London, or the Asian, whichever one I'm about to trade. Is it expanding with my bias, or is it stalling out? So we're going to do the same thing. We're going to identify any breaks of structures, any changes of characters, any point of interest, any areas I want to look for liquidity. I would identify any session liquidity targets where price may hunt in the next few hours. Let's check to see on that 1 hour if we are in a premium or discount. And we will also see more structure with the 1 hour. We should still be seeing higher highs and higher lows in the 1 hour. All right, so we still got the same break of structure here. I would like this right here for a change in character on a 1 hour. Let's mark up any fair value gaps. We have none. This liquidity level here, I would like to see that one get tagged out for making a move up. So I'll mark that as buy side liquidity. So my bias is still confirmed, man, as an uptrend in this example. So after this step, I know how I want to engage this session. I'm either stalking buys or sells, and where's my most likely point of interest to engage. So I know that in this example, I will want to look for buys, and I would like to see price either respect this order block right here. I would like to see price come down and take out this liquidity right here. That's what I would like to see. So this is what I'm getting from the 1 hour. All it did was just confirm my bias from the daily, from the 4 hour. So now let's move to the 15-minute. So the 15-minute is not where I'm going to enter. This is where I prep for entry. I'm looking to see is the algorithm engineering liquidity in line with my bias. So I'm going to mark up some liquidity sweep zones, some 15-minute fair value gaps, or even order blocks that align with my higher bias. Okay. I want to watch for breaks of structures. I want to watch for changes of characters. I want to look for is structure respecting my narrative. So we'll identify if I will wait or just wait to see if engineered entry on lower time frames. I'll identify where you will identify where you will wait to see engineered entry on lower time frame. If I see the engineering happening here, I know where I want to engage on the 5-minute and 1 minute. If it looks sloppy, I stay patient. All right. So let's go ahead and drop down. Okay. Let's measure out this small run here. Measure this out. Where am I? Okay. Previous, I told you about discount zones. When we're in the uptrend, it would be this 618 level. Equilibrium is 0.5 level. I want to see if price is going to respect this right here or move lower. I have an order block right here. Small order block high, and I'll just mark up the order block high. The order block low would be this wick right here. And I also would mark up this fair value gap. So you can see it better. And let's see. And I will wait and see what happens here. Now, if price doesn't respect this, I still would be okay with price coming down here, wicking this out and moving forward, okay? If it went any lower than that, I will wait. But if price did respect this area, I would like to see it wick out right here and then turn around, okay? So we got two things, ands, ifs, or ors that I will be looking for on this 15-minute. So now I'll drop to a 5-minute. This is where I watch the algorithm engineer the move. I'm not clicking here. I'm just waiting for signals, okay? Marking liquidity sweeps that happen on the 5-minute. I'm watching for breaks of structures, followed by strong displacement. I'm noting any point of interest where my 1-minute entry may occur, all right? If I see the sweep, the break of structure, the displacement, that's my green light to move to 1 minute and execute clean, all right? Let's go ahead and drop to the 5-minute. So I see a bunch of liquidity up under here. These are equal to relative lows right here. And it's inside of a fair value gap. And we got a 5-minute order block right here. I'm still looking for buys. If price respects all of this on the 5-minute, I mean, it's a green light, but we would have to wait for displacement and a break of structure. Displacement is just a large move to the upside, like something super big. Like it would have to be like bigger than this run right here for me to call it displacement. But I would also, before the displacement, I would need price to come take this out in this example. And that's after that was to happen, I would drop down to my 1 minute and I would execute. So this is the top-down flow, all right? This top-down flow is what separates consistent traders from random ones, all right? If you will master this flow and run it daily before every session, your trading psychology, your patience, and your results will level up super fast. Stop jumping straight to the 1 minute trying to catch a move. Build narrative first, then execute with discipline, brick by brick, all right? So this is day 6 of Brick by Brick. If you guys got any questions on top-down analysis, time frames, put it in the chat. Let me know. Have a blessed day and a great trading day tomorrow for anybody who's trading tomorrow. Peace.